Well, happy Friday to you. Thank you so much for joining us this morning. Glad you could be a part of our day. And, well, thanks for allowing us to be a part of yours. We look forward to talking with you about our market action. It was a softer market overnight. However, something just happened that may change that. We had some overnight export sales business. Let's take a look at what we have here this week. Kind of interesting developments here. We had a threefer, if you can say that. When it comes to overnight sales, we had a sale that went to China, we had a sale that went to Mexico, and we also had another sale that went to unknown destinations. We have Brian Hoops with us. He's with Midwest Market Solutions. So, Brian, we had, 325,000 tons that went to China. The Mexico amount, they like to do things in kind of odd numbers, 171,460. And then you had an amount to unknown destinations of 413,000 tons. A lot of times that turns out to be China. But, Brian, didn't we already have about 1 million tons booked earlier this week?
Good morning, Marlon. We certainly did. So we are going to see next Thursday's export sales numbers come out and be really bullish. They're going to be a very large number. So we know that already, so don't trade it next Thursday when those are released. So we've had a lot of sales this week. It's an indication that after our quarterly stocks, our acreage report came out, and things were much more bullish than expected as far as less planted acres, tighter numbers of supplies, that these foreign countries have a reason to be concerned about the supplies of the crop. Now, I think a lot of this product is going to end up being later in the marketing season, October and beyond, maybe into February. This will get them past the South American production. They're going to take beans out of Brazil for the summer months and into the fall. And when our freshly harvested crop becomes available starting in that October timeframe into November, December through the winter months, that's when these products will be delivered. So there's plenty of time that some of this product can be canceled or switched around. But in the near term here, they have basically a free call option, a free look at the market to see, do prices move higher? Are we going to have some sort of a drought, hot and dry weather in August that will curtail yields and send prices even higher? If so, they have their needs locked in. If not, they can make adjustments down the road. But for today, this is a supportive development for soybeans.
So producers are getting kind of mixed signals this year. I mean, here we were always told Brazil was going to have the biggest crop in history, and, we'll have a hard time swimming through all that. And then, we had expected pretty good production this year, although USDA trimmed the acreage. But there's going to be a lot of corn around, too. They're harvesting the safrinha crop in Brazil right now. What happened to the fact that everybody said we were going to be flooded in grain? Why the big rush all of a sudden?
Yeah, it's mostly because of that acreage report that showed that we have 2 million less acres planted of soybeans. And so it tightens up the balance sheet significantly. And especially if we start adjusting yields down from 52 bushel an acre, which would be an all-time record from the USDA. Now, weather forecasts really don't suggest that we're going to see increase in yields as we go into August and September. It's more likely yields are going to come down. And that's why kind of this rush or this panic to get some protection locked in from the foreign countries like Mexico and China, which is no doubt where the unknown destination is going to end up being. So that's where the concern is. There's not that concern for corn. We have bigger balance sheets. USDA is already anticipating big increase in export forecast, and we have that extra cushion of 4 million plus acres planted that could allow us to have some yield loss and still have too much supply for the market to bear.
Okay, let's take a look at the current prices and how we wrapped up overnight. This would be after the Globex close. On corn, we were down 11 3/4 on September. December went down 11.5 cents, and almost on the low of the overnight trade at 5.30 3/4. In the soybeans, you had the September. I'll ignore August for now because it's going to go into delivery. September down 12 3/4 at 14.40 3/4. November was down 11 3/4. And if we move on to the wheat in Chicago, we'll go with September down 16.5 at 6.96 1/4. All kinds of pressure in the grain sector. September KC wheat was down 16 1/4, finished at 8.50 1/4. In the spring wheat market in Minneapolis, we were down 14 1/4 cents. And in the cotton market, one of the few bright spots around. You had the December contract up 60 points at 84.98. Just wanted to point out, Brian, one thing, and I pointed this out in my podcast a little bit ago, that you have to be a little bit careful about who or what you're following when it comes to the weather outlooks. From what I understand, I think the American model is forecasting really super hot temperatures all the way up into Iowa. And the European model says, yeah, I don't think so. And I think it's talking temperatures in the mid to upper 80s, maybe. There's about a 30-degree disparity between the two on the same time frame. And so you have to kind of average them out, if nothing else. And don't just follow one outlet or one model, because it may mislead you. Just wanted to throw that out there as a word of caution. We need to take a break, and then Brian will come back and we'll talk about livestock in just a moment. All right, we're talking with Brian Hoops of Midwest Market Solutions. So we covered the grain side. Let's talk about the livestock side. By the way, we got the new PCE numbers out this morning, Brian. I'm sure you were watching that too. I think it came in at, 4.1% year over year, a little less than expected. Don't know if that's going to help or hinder the livestock trade moving forward from the consumer point of view. What do you think?
Probably not much of an influence on the livestock sector. Had the GDP numbers yesterday that sent the U.S. dollar sharply higher into some major overhead resistance. Now, after the numbers were released this morning, the dollar has weakened, and we're seeing a little pullback from that resistance. So it actually has allowed the metals markets to firm up, and could be a little supportive for the grains and for the livestock sector here this morning. But, we're just not hearing any cattle trade whatsoever, maybe 1,000 head in Iowa yesterday. And that's been it for the week. It's very quiet so far. And you expect that when we have these really hot temperatures across the plains. There's just not a real incentive to move these cattle and make them even more uncomfortable than what they already are.
So looking at how we closed yesterday here on our quotes from bar chart on the live cattle, it's interesting how we closed mixed. We had weakness on the nearby contracts yesterday, with the August down 62 cents. October was down 45. But the deferreds were just slightly higher yesterday on the close. And on the feeders, we were higher across the board. We'll go with September. It was up 82 cents at 248.27. And October was up 90 yesterday. On the lean hog market, we finished up the session with August, the only one higher. It was up 37 cents, but all the other months were lower. October down 37, December down 57. Brian, that lean hog market, I keep pointing out, it looks like it flatlined over the last week.
It has. It's gone really quiet. We've rallied up into resistance and just keep knocking our head against that wall. And there's not much selling pressure coming against it. But until we close above that 102 area for August, there's probably not a lot of technical buying that's going to come into the market at this price level. We need to see a jump in the futures, and it hasn't happened because of the low volume.
Good point. All right. Thanks, Brian. Appreciate the input this morning. Yeah, you have a good weekend too. Brian Hoops of Midwest Market Solutions.